Hi, everybody. Nat Myers here, founder of Raises.com. And today I'm joined by a special guest on the podcast. His name is Eric Grafstrom. And there are trillions of dollars that are transitioning from one generation to the next. And Exit Guide it's a platform that he's building and he founded that seems to be, leading some of the charge in helping this transition happen. So, Eric, nice to meet you.
Dude, thanks for having me. Glad to be here.
Glad to have you as well, man. So, yeah, no, I just learned some really interesting facts offline, and I think first, in your words, maybe introduce yourself to the crowd so that we
Sure.
learn about where you're coming from.
Sure. So, like a lot of entrepreneurs and startup people, I have, an odd story. I have a journalism major, and many years ago, I started my career. Uh, Quite honestly, at the time, I was dumb enough to try webcasting to people before computers had sound cards and speakers. True story, would make, 60, 70 cold calls a day. Um, it was a tough period, but that company became broadcast.com. I was working, yes, for Mark Cuban. Yahoo bought the company, took us to London and eventually out to the Bay Area. I left before things got really challenging at Yahoo, went back into startups and just kind of grew from a sales guy to a business development, strategic deal maker, and to an operator, and did a couple turns as a CEO. Uh, the last few years before moving to Austin in 2021, uh, we I was just coming into to companies oftentimes in distress situations, and VCs were bringing me in, members of the board, and I was helping companies at some form of an exit. In some cases, that might be successfully getting the company transitioned in a good state where somebody wanted to buy it. Other times, it was at least selling off the assets to recoup some of the investment. In some cases, it was just flat out dissolution. And I realized a couple of things. One is really stressful way to not make a great living. It sounds glamorous to be Silicon Valley, no, it wasn't. Two is, because of the nature of who is backing these companies and where I live in the heart of Silicon Valley, Menlo Park, California, I always had access to amazing resources. They could have been on staff or outside counsel or somebody in my local community that knew the ins and outs of everything from intellectual property to M&A or whatever it may be. Uh, and I'm driving down the road one day, and a story comes on the radio about baby boomers who are trying to transition out of these kind of smaller Main Street businesses, and they're really struggling. And I thought this was just odd. And when I looked into it, we'll talk more about this, but I had a couple of aha moments, but I decided to turn my attention to, really these tens of millions of business owners that need to transition trillions of dollars over the next 10 to 15 years and helping them move through that process um, in a way that really is kind of combination of technology and access to expert resource to really kind of help this massive transition because they just simply didn't have access to the things that I had access to. In Silicon Valley, it's its own little weird little bubble. So, this is a much bigger market with a much greater opportunity, but also, a much bigger set of potential problems if we don't address it.
See, that's amazing because making a transition from, the Silicon Valley mindsets to, the more mom and pop, helping the mom and pop type
Yeah.
of group, it's almost as if you're bridging the gap from that, Silicon Valley to almost Wall Street to Main Street. So you have all the three corners covered,
It
right?
feels good. What I'd like to say is that our customers are real people with real businesses and real revenue, which again, not to speak negatively about my decades of experience in Silicon Valley, but it's awesome to talk to people who have businesses that you can easily relate to that have been the fabric of a lot of communities across North America.
Yeah, no, exactly. It's more than just somebody talking about something that's in the hype. It's something that is
Yeah.
down to earth. You can see, feel, and touch. So we're talking as well offline about like misconceptions and mergers and acquisitions. There are tons of them, especially with regards to somebody selling their business. What are some main misconceptions that you've seen in somebody who's working on selling their business?
Sure. Well, this has become a popular trend lately, just, whether it's through Twitter and other things where people are starting to kind of say, boy, it'd be interesting to buy these businesses. They've got cash flow and other things. And some of that's true. But let me give a couple of numbers. One is, uh, small businesses in North America drive about 40% of GDP. So it's a huge number, trillions and trillions of dollars, truly. 85% of them are owned by Gen X and baby boomers. So youngest is like 44, most are over the age of 60. So just not to be morbid, but like the next 10 to 15 years, people are going to either want to or need to transition out of these businesses. It's not a, like to say, like 85% of small business owners have no plan to exit their business, but 100% of them will exit. Now, when you look at the market, it's huge, but the reality is 90% of these businesses are worth less than $5 million. So it means a couple of things, but I think one of the big misconceptions is, you know, all these businesses are out there and they're all buyable and whatever it may be. And it isn't totally true. So what you have a vast majority of these businesses, which are really too small to engage people like business brokers, M&A advisors, lawyers, and others for a couple of reasons. One is because this market is so big, all of those resources are going to go to businesses that are worth 10, 15, $20 million and above. And there's going to be plenty of them, and there's going to be more coming. Two is not every business owner is actually looking for a buyer. We've helped thousands of owners move through our platform. Almost 50% actually already know who's going to buy that business. It's going to be an employee, family member, business partner, someone in the local community. Telling them that you're going to help them find a buyer is of zero value and it's kind of an annoyance. They're trying to figure out, how do I move through the transaction? So, the what I would tell people is, remember two things. Yes, it's a massive market, but most of these deals are really, really small. And two, not every business owner is actually out there actively looking for a buyer. In most cases, they're not.
Hmm. Yeah, some people may find that either heartening or disheartening, depending on what side of the equation you're on. But that's
Yeah,
I
yeah,
personally find it really funny. So,
yeah,
well, like the top businesses get the best resources, lawyers, and so on. But then
yep,
the bottom,
exactly.
yeah, and then the bottom 90% you're saying don't. So, what are some of those people that don't have those resources? What are some of the biggest ways that they actually mess up due diligence?
Yeah, I mean, look, the important we like to tell people there's three steps in this process. So before you decide to sell your business, think about it as selling a house. You wouldn't wake up on a Saturday morning and say, let's sell our home and stick a sign in the front yard. You would say, well, okay, we need to clean it up. We need to probably get an understanding of what it's worth. There's some repairs we need to make. And that might take a couple of weeks. It might even take a few months. But if I want to successfully sell my house in this neighborhood, I need to understand what it's worth and make sure it's going to be attractive to a buyer. And that's preparation. So, one of the things to keep in mind is 50% of deals actually fall apart during the due diligence process. The number gets up as the smaller deals, as you get down in price point. And it's simply because sellers don't necessarily have the information they need, or they have unrealistic expectations around the process. So at Exit Guide, people can come in, they get a free estimated range of what the business could be worth, and they get access to, you know, some information, classes, and articles that can help them learn about the process. What's the difference between selling the assets versus selling the business? If I'm selling the business, am I selling all the business or some of the business? Am I selling, shares, depending on what the structure is? So it's a whole lot of questions just about, like, what am I even doing, that we try to address. And then
Mm,
you move to that preparation process, which is, look, it's kind of busy work, but it's important. Formation docs, accurate financial statements, what are the reasons somebody would want to buy your business? So there's things that owners need to go think about that we help walk them through. And some of it is work that's required on their own. They really can't outsource it. And so, what we're really trying to stress to small business owners is, if you want to increase the likelihood of closing a transaction, even if that's with someone that you already know, like an employee, or finding a buyer, you have to be prepared. And that means kind of organizing the documents, having the right set of expectations, and understanding kind of how to move through this process.
oh, awesome. And so it's interesting because from the seller's perspective, the preparation is important, but this next fact is probably one of the biggest surprises that I had when discussing with you offline, because you say that less than 10% of potential sellers, in this niche will find a buyer and actually close. So I guess some of it may have to do with lack of preparation, but what are some of the reasons why
Sure.
yes, yeah.
In one caveat, we successfully find a buyer online.
Oh,
So, when people think about this, they think of online marketplaces and businesses. And again, these are valuable services that do serve a need.
yeah.
But when you talk to people who are looking to buy business, they'll tell you that the noise to signal ratio is pretty high, or that they spend a lot of time, cultivating through all sorts of things that have no interest and no appeal to them. And so, again, let's take a look at the market. Well, one, Main Street largely are hyper-local businesses. So chances are your buyer is going to come from your local community. So, if you look at a site and they kind of, tell you all about the millions of eyeballs that they're driving there, that's great. If you have an online business, an e-commerce business, or a SaaS business, or something to be run remotely, that's fantastic. But if you're running a local landscape company, well, if that company is in Minneapolis, Minnesota, and you're paying, hundreds and sometimes thousands of dollars to reach eyeballs, and someone in Atlanta, Georgia is looking at that, chances of that person being, even remotely qualified to buy your business is relatively low. So geography plays a huge role in this, in terms of, who you're trying to reach, when you're trying to source, potential buyers. Two is that, when people list their business, they may pick a price of what they want. Well, that's fantastic. But if your business is not necessarily worth that, because either your expectations are unrealistic or you haven't done the work to actually prepare your business to sell, then, you know, that deal is going to fall apart pretty quickly, in terms of either what you want for the business versus what the business may be worth in the eyes of potential buyers. Or once a potential buyer starts to dig in and realizes you've done none of the upfront work to prepare the business to engage somebody to move through due diligence. So when you kind of start to break down the market, and you kind of say, okay, 45% of these businesses already know who the buyer is, you take them off the table. We get a whole bunch of businesses that are probably hyper local, so they're going to find a buyer in their local community. Call that another 40%. There's probably a whole bunch of businesses that, quite frankly, they're just not buyable, meaning they're not really going to attract a buyer, at least not now, and may need to wait. So when you kind of, go down to, you have to have a business that isn't geographically constrained, is completely and totally ready to attract a buyer and move through due diligence. It's a relatively small number.
Hmm. And it's almost kind of sad. It's like an orphan, but like, what were those businesses that are unable to even get a buyer, whether they're ready, buyer worthy
Yeah.
or not? What happens to those businesses?
Yeah, I mean, look, it's a good question. And when we started Exit Guide, one of the things we had is, look, not every transaction is going to lead, or is going to end with the successful sourcing and of a buyer in a top dollar outcome. I mean, it's great and everyone should talk about that, but there's some businesses that will have to look at, well, maybe I didn't find a buyer in my local community at top dollar, but I want to ensure the legacy of the business and keep my employees employed. Well, that may look like an employee buying the business. It
Hmm.
may mean maybe I have to sell the assets and dissolve the business, but I can still at least, pay off all my liabilities and pocket some cash. Maybe it's not the outcome I wanted, but it's still some form of an outcome. In other cases, we may work with them to say, hey, look, if your business today is worth $350,000 and you want to sell it for 500,000, it may take you a year or two to get there. So can you work with a business coach and some of our resources to increase your valuation? The number one thing that we want to make sure of is that, you know, we're not trying to predefine a path for someone, even if it's what they want to go do. But if what they want to go do is not realistic, we want to be able to channel, their time, energy, and resources into what is still a successful outcome, based on, kind of what are the practical limitations and constraints of market, or what the business reality is for their own particular business.
It makes a lot of sense, and there are a few things that you mentioned, especially at the beginning of the call, like the financial statements, the company
Mm,
information documents. So, what are some of the most mysterious parts of the of preparing the transaction from the seller point of view that exit guide comes in and helps them on?
sure. Yeah. So uh, what happens is, when somebody completes a free assessment, takes 7 or 8 minutes, they self-report things like, revenue and profit, assets and liabilities, and then they could tell us about when, why, and how they want to exit. So it might look, hey, my revenue is 500,000. I have net profit of 100,000. my plan is to sell my business in the next 6 months to an employee. Uh, and then we collect some other things. So at the top of that funnel, 65% of people report that their biggest concern is navigating the steps in the transaction versus 23% will state finding a buyer. And so, what this means is, I think oftentimes it's fear, uncertainty, and doubt. I don't know what to go do. And so people need to, one, make sure that your financial information is up to date. If you've been keeping your own books, it'd be wise to actually engage a bookkeeper or a CPA to review that and make any updates and adjustments, because bad data is going to lead to bad reports, and bad reports are going to kill a deal. So really what every buyer needs, or excuse me, what every seller needs to have ready is at least 3 years of P&L statements, a current balance sheet, 2, if not 3 years of tax returns. That's just to get out of the gate and make sure that you can engage. And all those things need to be accurate. So if you're not ready to share that information because it's not current, it's not up to date, maybe you have an outstanding balance with state, federal, local authority, get that stuff cleaned up. Don't start telling people that your business is for sale until that information is cleaned up. So people move through a dashboard that starts with, let's talk about, ways that you can describe your business for a potential buyer. So they're starting to fill out, elements in the dashboard that explain their business. The next stage is financial information. We make sure that that's up. And so what they're doing is they're getting effectively a very self-directed way of moving through this process, so they know what to do, when to do it, make sure that information is ready. And then when they're, at that stage where all this information is gathered, they just simply share that, what many people refer to as a data room, just share that with their buyers so that everything is there, neatly organized, professionally presented, and ready to move through the process of due diligence.
Brilliant. See, like as a businessman with exposure in Silicon Valley and experience there, like it looks like you brought that knowledge to sort of to the masses who are looking to sell their business. So I like the way that you explain the way that they move through the dashboard, and it makes a lot of sense. Okay, so everybody, they have their business ready, everything's ready to go with exit guide. Now, you mentioned another shocking fact that when I heard this fact, like when we were discussing, I was like, wow. So how many businesses did you say are seller financed? And maybe to
Yeah,
get engaged, maybe if you can explain what that means to the people who don't know what that is.
sure. So, okay, so you and I agree, you want to buy my light man, and we agree on a price of $600,000. Well, depending on who you are, the chances that you have $600,000, in liquidity is relatively low.
Yeah.
And so now you've got some options, which is, okay, how do I finance this thing? Well, one would be you could go, get an SBA loan. Well, look, SBA loans are great, and there's plenty of people out there, but that process tends to break down in a couple of areas. So one is somebody goes to the local bank. It may be a bank that is not all that creative or familiar with SBA loans. They do them, but they do ones that kind of are for bigger companies that fit into a box where maybe there's already a finance person on board. But these are really small businesses. So, financial statements may not have the depth and other information, or there may be other elements of the criteria that just kind of get lost. And so one is people try, but they get frustrated and stonewalled with the first few steps and they just give up. Two is, we've had, people who are trying to sell a business and they're trying to kind of get a loan, and the buyer just simply doesn't meet capital injection requirements. So again, you might have an employee who's been working for you for the past 5 years that makes $60,000. Well, if they rent an apartment and, maybe they, do a pretty good job of their finances, but they don't have anything that is going to act as collateral on a $600,000 loan. So SBA lending works. I'd recommend talking to brokers or other people who have access to a whole platform of lenders, and we try to put people in touch with those. But if it doesn't work, and both the buyer and seller want to make the transaction happen, you move to what's called seller financing, meaning the seller is going to basically allow the buyer to pay him or her back over a period of time with interest using proceeds from the business. So if we agree that it's $600,000, it may be a 5 to 6 year term with $100,000 a year at a 5% interest rate. And they know that the business can support that, right? It's not unrealistic. and so that the buyer can actually, still pay themselves, operate the business, expand the business, but then use some of those proceeds to pay the seller back over a period of time. So, sometimes what happens with these transactions is, in addition to the asset, or excuse me, the business purchase agreement, is you have a note that outlines the payment terms and the interest rates and the payback period, alongside with that agreement.
Nice. And the fact that so many people have gone away from the SBA loan, is that a sign of something bigger that is happening in the market, or the fact that so many people are jumping to the SB, or sorry, are jumping to seller finance and are leaving the SBA loan alone? Is that a sign of something
Well,
to come? Or-
I'm not an expert in SBA lending. I think what I've seen in talking to people who are experts in that space is that the SBA 7A loan program is actually a great program, and I think more and people are taking advantage of it. So I think one of the biggest challenges there is just perception.
Yeah.
I think actually the SBA has actually become, a more valuable and flexible tool for people to utilize. But I think it's like a lot of things is you may not buy a home because you're just going to assume you don't qualify for a mortgage. Well, if you haven't talked to somebody who's a mortgage broker, you may be missing out on the latest information. So get educated first. You can use a platform like ours. We have plenty of resources and articles on our website. Find other people that you can talk to who actually understand the market. Don't make too many assumptions before you assume you're not going to qualify for that SBA loan, because there's a variety of programs, especially if you're a veteran or in other classes where you might be able to qualify under certain programs. Again, I mentioned veterans. These great programs that are out there. But I think what happens is, again, many of the programs are for businesses of a certain size requirement, a minimum. And so when you have all these businesses that are worth a few $100,000, it just simply may not fit into the box. And that's where you do need to look at alternatives. And so I think what you're seeing too is with people in fintech space are starting to kind of see this gap in the market and figure out how they can kind of back these types of loans, because generally speaking, these are great businesses. These aren't businesses that are tied to kind of tech trends or other things in the market. They generally tend to be relatively stable businesses with a good financial history that someone can buy. They just need somebody who's interested in backing these types of loan environments.
Yeah, exactly. And I like the way you spoke respectfully of different programs out there. There are also a lot of different platforms out there, and I was looking at the Exit Guide platform doing my homework for this interview, and I didn't even know that something like this existed, and it seems to be filling a gap there.
Yeah,
So like, there's a lot of hype out there in the market, especially the fact that if somebody lists their business online on a platform, people would magically fly to them from like all around North America to invest in their business in their laundromats in uh, Alberta or something. So that's a
sure.
piece of hype that has just been quenched
Yeah,
or something. But what are some other, if any, what are all the hype? Can you distinguish hype from reality for our listeners in somebody
sure.
sell their business? Yeah.
Sure. Look, being an entrepreneur is hard. And what I tell people is, like, there's different flavors of entrepreneurship. For better or for worse, my journey through entrepreneur has been tech startups, and that kicked off with you know decades ago. Being in many respects in the right place in the right time. But businesses I've worked with generally kind of start with this of, this thing doesn't exist in the world, and we want to go bring this into the world. But entrepreneurship can also be very stable, high quality businesses that deliver day-to-day needs and services, coffee shops, flower shops, appliance repair, CPA firms. And so uh, you know but running these businesses is still a lot of work. And so this is different. So if you think about leaving your W-2 job, you know one of the things you really need to ask yourself is, what is it like to work in this business day to day? There is, generally speaking, may not be an HR department and policies and procedures. And, the small business owner, oftentimes if you don't show up, things don't happen. Versus if you work in a company that has maybe hundreds or thousands or even tens of thousands of employees, there's challenges in working in that environment, but there's also a set of guardrails. So one, if you're looking at buying one of these types of businesses, you know, be prepared to kind of wear many, many hats, The effort to make these businesses work is hard, and you need to understand some of the crazy stories of what it takes to kind of sometimes deliver, on client needs. Two is there's a huge gap in the market. We've seen this with our data and everything else we've looked at is, you know, people kind of guess their way through this. And, it kind of works, but we're trying to address this, which is how do you educate both the buyer and the seller about what needs to happen? And so don't overcomplicate this. So if you come from an M&A background, don't expect somebody who's running auto repair shop that turns over $1 million a year to have the same level of sophistication in how they run their businesses, a $50 million business.
Hmm.
And so what we're trying to do is basically blend technology and access to what we refer to as coaches or expert resources to allow people to move through a very simplified M&A process. So you need to do some things because people are going to want to know what they're buying. There's steps that we can kind of walk you through online, but we don't want to overcomplicate this with jargon or processes or structure that is simply not needed for these types of businesses. So be prepared if you're looking that's out there, realize that it's going to take a lot of work to find a business that's right for you. The number one criteria I tell people is if you want to buy a small business, start with geography. Like if you're not willing to live in 80% of the places where these businesses are going to be listed, then you need to know that before you start looking at stuff. Because there's no point in going to your spouse or your family and saying, do you guys want to move to, a city that's 1,200 miles away and find out that everybody looks at you like you're insane, even though there might be an interesting business opportunity. So it's like the number one thing that people tend to forget about because they get excited about what they can do with these businesses. Um, and there's a lot of well-run small businesses that are out there. So, take the time, be humble and learn from an owner because even if there's things that they've missed or not gotten to or weren't capable of doing, they have put their heart and soul into this and probably put a roof over the heads of their family and managed to make a decent living. So if you've got some ideas about how you can modify and change the business, still be respectful of what somebody, generally built from scratch, as you start to move through the process. You don't want to come in and make it seem like what they've done is okay, but you're going to turn it around and make it, that much better.
Brilliant. Because you're coming at it from like you've been in the trenches yourself, being an entrepreneur, you can get your own hands dirty, and then you're also like at a almost elevated position where you're seeing all these people and things. So, just take to the listeners. I advise you to just take that into context. And as we start to, I guess wrap up, I'm looking at exitguide.com and sort of the website right in front of me here. How can people get in touch with you if they have any business inquiry, if they want to like sell their business, or
Sure,
even anybody in general, they want to do business with you or your
sure.
company? How would they be
Yeah,
able to get in touch?
sure. So if you're interested in selling your business, you just want to start moving through the process, just go to exitguide.com and move through our free assessment. It takes 7 or 8 minutes. We ask you some questions. It sets up your account and gives you an estimated range for what your business is worth. And you start to get access to kind of information and tools to kind of at least understand what, is involved in this process. Uh, if you're kind of just generally interested in the space, you can email me, Eric with a C, ERIC at exitguide.com, or connect with me on LinkedIn. If you do, please mention raises.com and Atu and always good to know where I came from and like to take extra care of those that come through interviews like this. Uh, and what I would say is reach out to us. We do monthly webinars. We did one in November about small business valuations. We did one in December with another guest about navigating the steps in due diligence. So what we do is we bring on experts who bring decades of experience, and we just do a 30-minute conversation. We ask them questions, and we do these on Zoom. We're going to have one coming up in January that really is what to expect if you want to sell your business in 2024. So we're doing a lot to try to educate people. So you can find us on Twitter, you can find us on LinkedIn, you can email me directly. And if you're a small business owner, just go to exitguide.com and reach out or start the assessment and be happy to help.
Brilliant. And Eric, thank you for just making the interview really, honestly, really, really easy to do. And yeah, no, he's a great guy to get into conversation with and to work with. So yep, go to exitguide.com, as he said, follow all the links and they'll be in the description of wherever you're seeing this video. And everyone, we look forward to seeing you in the next one. Off to the
Very
races.
good.
Thank you, Eric.
Thank you. Enjoyed it.